In this video, I'm going to tell you exactly why S Corps are starting to become the new LLCs. If you're someone who is trying to figure out which entity structure for your business is the best, then this is one of the videos that you're going to want to lock in and save. I'm going to explain to you why LLCs are dead and why you need to consider S corporations. Let's dive in. LLCs, or limited liability companies, first arrived onto the scene in America in the late 1970s. They were created to fill a void in the world of entity structures. You see, millions of business people wanted to be able to have business entities with the flexibility of a partnership, but with the liability protection of a corporation. But before 1970s, there wasn't really a good option in the United States. The LLC completely solved this problem. You see, once LLCs were created, they grew rapidly in popularity across the United States. The first state that offered them was Wyoming in 1977. But by 1996, all 50 states allowed business owners to form and operate LLCs. Now in 2024, there are over 20 million LLCs in America. Here are some of the pros and cons with LLCs. The creation of the modern LLC was a major step forward in business in the United States. It allowed entrepreneurs to feel more comfortable forming small companies, knowing that they wouldn't be personally held liable for all of the business debts and liabilities. But most importantly, LLCs also have pass-through taxation, which means that LLC owners are not taxed twice, both at the corporate level and at the personal level. The profits pass through the corporation directly to the LLC owners, who are also known as members. And thus, LLC owners are only taxed on the personal level. So you're avoiding double taxation while having liability protection, which is an incredible benefit and advantage if you're starting a new business. LLCs also have other benefits such as easy setup, low cost of fees and maintenance. They have very simple reporting requirements inside of the tax returns. However, despite having all of these advantages, there's one major issue with LLCs that's causing so many people to turn to S corporations instead. And this issue, ladies and gentlemen, it's called self-employment tax. LLCs have self-employment tax, and most LLC owners pay self-employment taxes without knowing. Self-employment taxes are taxes that self-employed people have to pay to cover the costs of Social Security and Medicare. The self-employment tax rate, in case you didn't know, is 15.3%. So on an annual income of $100,000, that's $15,300 you have to pay. Self-employment taxes are included in income taxes for self-employed people. They are separate from standalone federal taxes that you pay to Uncle Sam. What is currently happening in America is that a lot of people start LLCs because they want to have access to the benefits I discussed earlier, avoiding double taxation, having liability protection, and much more. But then when it comes to filing their tax returns and when they start making more and more money, they start paying more and more self-employment taxes. And this starts to add up and it becomes a burden, especially on a new business owner. You see, many entrepreneurs who were previously employees actually get taken by surprise by this tax. This is because employees don't have to pay self-employment tax at 15.3%. For employees, the Social Security and Medicare tax burden is split between them and their employer. So as a result, a lot of new LLC owners get hit badly by this new self-employment tax in their first couple of years owning their LLCs. Now, you might be asking, why would it make more sense to be an S Corp then? Just like how LLCs solved a number of crucial entity structuring challenges in the 1970s that caused them to grow in popularity, S Corps also solved key entity structuring challenges and are now growing in popularity as a result. S Corps provides small business owners with an easy way to stop getting hit so badly with self-employment taxes. With an S corporation, you divide the money that you are paying yourself into two different categories. The very first category is called distributions, very similar to what you would do when you have an LLC, just transferring money to yourself. But then the second category is called payroll, and that's when you give yourself a salary. When you do this, you only have to pay Social Security and Medicare taxes, aka FICA taxes, on the salaried portion. The great thing about doing this is that you will only have to pay FICA taxes on the money that you pay yourself as a salary, and guess who gets to control the salary? You do. You might be asking yourself, Karlton, what portion of your income should be considered salary? The smaller the portion of your income that is salary, the more that you will be able to reduce your taxes on FICA, self-employment taxes. However, the IRS does require you to take a reasonable compensation. So if you're making $100,000 a year with your S corporation working as a contractor, you cannot just pay yourself a $1,000 salary. That would not be considered reasonable. So at my company, I always recommend that my clients take at least 30% of their income in salary if they're going to have an S corporation and split their income between distributions and salary. This would mean that $30,000 would be your salary if you were making $100K. Now, if you did the salary versus distribution split like this, then you would only have to pay FICA taxes on that first $30,000. You would not have to pay self-employment taxes on the other $70K. This means that you would save 15.3% on $70,000 of distributions. That would come out to about $10,700 in taxes you would save. So as you can see, the self-employment tax savings can be quite substantial for people who switch to S Corps from LLCs. And this is the main reason why S corporations are rising in popularity and starting to compete with more and more LLCs. There are now over 5 million S corporations in America, and that number is going to grow. So, should you make the switch? If you have never heard of S Corps before, or if you're just now realizing how much you could potentially save in self-employment taxes by making the switch over to an S corporation, the next thing you're probably wondering is, when do people actually make that switch? Well, a general rule of thumb that I have for my clients is that if you're making at least, I repeat, at least $50,000 in profit by the end of the year, and if you know you're gonna do more than that by the end of the year, then yes, the benefits outweigh the cost to filing tax returns as an S Corp as opposed to an LLC. So it is better for you to focus on increasing your revenue if you have not gotten to a point yet where you have 50K in profit, because you're not starting to get crushed by self-employment taxes just yet. So it almost makes more sense to pay into self-employment taxes until you've made 50,000. Will S Corps eventually replace LLCs? This is a conversation I'm having all the time with my CPAs. When LLCs first came out, very few people thought that they would ever become more popular than partnerships or corporations. However, they did because they solve entity structuring challenges for business people. And this is why they've grown in popularity. But the truth about the modern business world is that extremely high self-employment taxes have become the norm. In fact, this very issue is what causes a lot of people to pick up the phone and call my company Tax Alchemy. S Corps have proven to be a very reliable solution to high self-employment tax problems, and they are helping many people save tens of thousands of dollars on taxes every single year. And that's why we help our clients make the switch. So, it is hypothetically possible that S Corps could replace LLCs one day, but we're not there just yet. Part of the reason why is because a lot of people simply don't know that you can swap out your LLC for an S Corp and save a bunch in self-employment taxes. That is why I'm making this video. Here are some things that I want you to know about making the switch over to an S corporation. If you are thinking that this might be possible for you with the amount of revenue that you're making this year, there are a number of key rules that you need to be aware of that the IRS has put in place. For example, S Corps can only have 100 shareholders. If you are a US citizen or a US resident, you can have an S Corp. If you're not, you cannot. Also, shareholders of S Corps cannot be other corporations, partnerships, or other certain types of estates. Additionally, S Corps can only have one class of stock, and all outstanding shares must have equal rights to distribution and liquidation proceeds. But different voting rights are allowed for S corporations. Another thing is, S corporations must be incorporated domestically here in the United States. So if you're thinking about setting one up offshore, you cannot. You see, the bottom line with LLCs and S Corps is that LLCs are now really only ideal for businesses that are just getting started or for real estate. So if you're a business that's just getting started and you haven't made a lot of profit, LLC is the way to go. Or if you're owning an investment property, LLC is the way to go. But if you're an LLC owner, you're finding success, then you need to make the switch over to an S corporation. You can do so by filling out Form 2553 with the IRS. But just remember, the IRS is only going to accept your S Corp if you can comply with all of the rules. If you want to learn more about S corporations, then not only should you subscribe to this channel, but go ahead and visit the link below to book a consultation with my team. What we will do is we'll take the time to go over the differences between the LLC and the S Corp for you, help you determine if the benefits outweigh the cost, structure your S Corporation for you, and make sure that we implement strategies before the end of the year. My name is Karlton Dennis. You know what to do. Like, comment, subscribe, share this with one other person that is considering setting up an LLC, and let them know that LLCs might be dead. It's time to think S Corporation. I'll chat with you on the next video. Thank you so much.